Hello and welcome to the day ahead. It is Thursday, November the 17th. I'm Andrew Gagan. Global equity markets fell overnight. Markets in Europe steadied as fears that the conflict in Ukraine could spread dissipated when Poland's president revealed that a missile that struck his country was most likely a stray Ukrainian projectile. On Wall Street, the S&P 500 and Nasdaq fell as retailer Target forecast a slowdown in sales heading into the holiday season. Shares in Target tumbled as lower sales and heavy discounting hurt its third quarter profit. That affected the broader retail sector, with Macy's, Best Buy and Dollar Tree all falling. This is despite the latest data on US retail sales showing consumer spending remains stable. Shares in home improvement retailer Lowe's jumped after increasing its annual profit forecast. And shares in Micron Technology were sold off heavily after announcing it would cut its supply of memory chips next year, which helped push the Philadelphia Semiconductor Index down. Well, inflation in the UK has hit a 41-year high. Fueled by surging energy and food prices, consumer prices rose 11.1% in the 12 months to October, up from the 10.1% in September. This comes ahead of the latest budgetary measures to be announced by Finance Minister Jeremy Hunt, with expected tax hikes and spending cuts. US retail sales increased more than expected in October. Spending rose 1.3% to be up 8.3% for the year. Sales of motor vehicles led the way, along with gasoline, building materials and food services. Economists say increased spending amid signs of a slowdown in inflation makes it more likely the US economy can avoid a recession next year. However, Barclays is forecasting recession in the US, along with other developed economies. The brokerage warning that 2023 is set to be one of the weakest years for growth in 4 decades, with the UK and Eurozone entering recession in the third and fourth quarters, and for growth in China of 3.8%. India is seen as the exception and is forecast to grow at 5% next year. Well, long-dated US Treasury yields have fallen, the 10-year down to 3.73%, the 2-year at 4.36%, and the US dollar was mixed against most major currencies, the Aussie dollar currently at 67.4 US cents. Well, the Australian share market is likely to be looking for direction this morning. It's currently off around 0.1% on SPI futures. Crude oil prices have fallen as US gasoline and distillate inventories rose, while Russian oil shipments to Hungary restarted and rising COVID cases in China weighed on sentiment. Iron ore futures were steady as Chinese measures to support the property market are expected to boost demand. And nickel has plunged more than 10%. Gold futures rose slightly and Bitcoin has fallen back below 17,000 US dollars. And that is your day ahead. We'll see you again tomorrow.